Well, it's crazy to think that we could be in the midst of a bull trap forming as the market is pushing into, once again, new all time highs. But that may be the case. So, in tonight's stock market brief show, I'm going to be walking you through the data we have right now, including some relative strength charts, some seasonality, market expectations. So, you don't end up being one of the traders caught off guard if a bull trap actually takes place. Let's get into it. All right, ladies and gentlemen, welcome back to the show. This is the chart of the S&P 500, the SPX on the daily time frame, and we were showing this bull channel that we've been in, and it continues to be in there. We had a little bit of selling into the Jackson Hole Symposium. Boom, we bounce off the lower, and we continue higher within this channel into new high ground around 6,500. We do still have a bearish divergence on the RSI forming, and as well as the percent price oscillator has been flattening out for quite some time, but that's okay. The market continues to put in a series of higher lows and higher highs, which is bullish. And if you take a look over here at the relative strength safety charts, right? This is looking at gold relative to the S&P 500, utilities, consumer staples, TLT, right? Bonds, healthcare, and defense. This right here is just basically saying when these lines are going down, the S&P 500 is risk on, right? The market's moving higher most likely because these more notorious known as safety trades are underperforming that product. In fact, if you go back to like February to April, look how this line was going up. Well, we all know what was going on February to April, right? The market was going down. So those ones performed better from a relative standpoint. Okay, so overall, they are still trending lower, which is not necessarily a bearish sign. Seasonality, however, on the other hand, we are coming into the month of September, and well, September is notoriously known for being a little bit more volatile. And as you can see here, this is what the 5-year history looks like going into September, and it's been following pretty good. There was that shock over here, and then the 5-year history didn't suggest that happening, but then we quickly remained back on track, pretty tight knit there with seasonality. So we're kind of approaching that area where we see markets consolidate and or pull back. And this is also taking place when back month versus front month volatility remains at an elevated stance at over 20%. And as we pointed out many times, when you get to these levels, this is where the market typically tends to consolidate, right? Last week, we left unchanged. This week, we're pretty much unchanged. We're slightly up so far, but it's rather unchanged. So we've been seeing the consolidation take place, but not necessarily a pullback as we are reaching into new highs. If we take a look at the 11 sectors that make up the S&P 500, tech led the way, energy right there behind it. Energy's been catching a bit of a bid this last week or so. They've been showing out, and that's typically not the greatest sign either for the overall market. I don't got those charts in front of me to prove to you that and show you the data, but you'd have to take my word or look at the prior videos where I do show energy relative to the S&P 500 and what that does to the SPX. Towards the bottom of the list, we have our risk off sectors, right? Consumer staples and utilities underperforming everything else. And as you all know, we had NVIDIA report earnings. It started off coming down into the lower implied move for earnings, but through the night we came back, and then we had a little burst up in the morning, and we've finished unchanged. So for as big as an earnings event this was, the market remained rather unchanged. But the levels you want to watch for, because sometimes the amount of volume that goes in to creating these levels or these implied moves, they can hold some potential power if price were to reach down to these levels. So for example, if tomorrow all of a sudden we come sinking down, pay attention to 170, or if we start ripping up higher, right, watch that 194 level. Not to say that that's going to get there tomorrow, but might be some levels to just keep on your screen and see how they respond when inevitably it's going to tag one of those at some point. Now, as far as going into Friday, we do have some data coming out an hour before the market opens up. We got core PCE, personal income, personal spending, good trade. So these are market moving type events. They're higher tier news events. So be aware that that can cause some volatility. We get some PCE numbers and so forth. Now, what's that doing as far as what is the market pricing in as far as risk going into this Friday's these macro reports. Well, if you look at the expected moves over here, these are the daily expected moves, something that I share with my Discord/Patreon group. I'll talk about that in a moment because I do have some changes and some announcements there, which we've been talking about. I want to give everyone a clear heads up before month end. But you can see that the daily expected move for the SPX is only plus or minus $33. Now that's a 1 standard deviation move, right? That's a 1 standard deviation move. And if you think of that in terms of a distribution curve, right? 1 standard deviation, 68% of the time. So we can go for one of those levels, right? Or close within it 68% of the time. I include the 2 sigma levels here too, right? If you go 2 sigma, that's a 95% probability, right? So if you get outside of these 2 sigma levels, there's high probability that can respond or pull back in. Seen that countless times, and it makes for good intraday trades. But these are the levels for SPX, NDX, RUT. So you can look at these daily implied levels, right? You can put them on your screen, the upper, the lower levels, and even the 2 standard deviation if you choose to do so. But I figured I'd share with you. This is something that I send daily to my Discord group/Patreon now. Well, that's $9 a month as it stands right now. It is going up next month. So if you lock in this rate, you can be grandfathered in. It's ridiculously cheap for all the stuff that I offer. I'll show you some more of the stuff that I do provide. But I wanted to let you also know that if you want even a more discounted rate than this, sign up for the annual. It's like $90, right, for an entire year. It's nothing, right? $90 for an entire year for everything that comes in here is quite ridiculous. But that's what it is. If you do that and you do not cancel the membership, you're locked in for that for as long as you want to stay in the group. $90 for $90 a year. Okay. You get the swing trading setups. It's not an alert service, right? Tight list, watch list. I'll show you what that looks like. Expected moves, daily, weekly, monthly, quarterly. I did include my Asher bot. I haven't put it on the screen yet, but my Asher bot's sweet, right? This is where you can type in various commands and you can get the eyeball ranges for the upper daily. For daily, you can do it for weekly, all for different various equities and stocks. It gives you a confidence score, and that really just tells you just how liquid of a product it really is, right? If you get a low confidence score, it's probably a more illiquid type product in the options chain. Looks at various different things there. 2 sigma levels, and then also the eyeball premium and discounts. You can type in a very different command to get that. And now I'm introducing, which it should be now finalized for sure this next week. I ran the final test with it, but you'll get monthly implied moves, which is cool. And then now you'll be able to search historic implied moves, like weekly move from last week or the week prior, or what was last month's implied move, or what was last year's implied move for the month in December, or whatever you want to look at. This is just a snapshot of something that I sent out in the trade ideas. This is my tight list. My tight list I send out every week. I don't really annotate it, but I figured I'd share on today what I shared with my group the other day. Just various names that are coiling up, right? Stocks move between expansion and contraction. So I shared that, and I shared this of some of the names that are just kind of on the radar that are setting up and so forth. Okay, let's carry on. Another couple of things that I want to talk about as far as the potential for a bull trap is that we have reached the upper bounds now and now exceeding, right, this call wall. So 6,500, I'm going to be interested to see where traders are reaching, but I'd say about 50 to 100 points higher is where the market's kind of reaching. But once again, under 6,500, there's not much going on underneath it, right? So there's not much of a support area. So anything under 6,500, we can see probably 25, 30 point, 50 point drops fairly quickly, right? This is 6,450. This is 6,475 right over here. So just be aware of that you really do got to hold 6,500 to feel a little bit more confident now. And you can really see that here when you're looking at the SPX net gamma versus spot chart. You can see this is where we currently are. I think we're slightly higher than this. I don't think it's fully updated. And then this is where the gamma flip line is. And when you go below the gamma flip line, this is where volatility can kind of erupt, right? Where you see stronger moves up, stronger moves down in the market. This is where, right, dealers look to sell into selling, they buy into buying. And when you're above the gamma flip line, which we have been above it for quite some time, vol is suppressed, right? This is where dealers look to buy the dip, they sell the rip. They buy the dip, they sell the rip. But the reason why I'm calling out now is because we're kind of reaching into the upper bounds here, where the reward to the upside is minimalizing, but yet the steepness to the downside is rather steep, right? So it's just this risk to reward has been skewed. Not to say that it can't go higher by any means. This is what the market's been doing, but you can just see from a risk to reward standpoint, things are changing dramatically. And this is where we close. We close right at about that 6,500, that call wall. That seemed like it was going to get tagged at some point. We're slightly above the JPM caller. This is the original JPM caller. They did move it up to, I think, 25 point higher. So basically 65.05, right, when they made the adjustments, but I just kept it at the old one. So we're just kind of within that range. Going into tomorrow's trading session, right, 65.35 is that upper daily implied move, and slightly above that is 65.48. And we have yet to tag an upper or lower weekly implied move for this week. So if the market wants to get going, even if it were to come up here into that upper daily, upper weekly implied move, that's all within that one standard deviation, what the market price in as far as risk. I would say be more careful under 6,500 because it opens the door to obviously that lower daily implied move, and we got to see what price does in and around those levels. This is the SPX Gamma flip line. So yeah, this is the historic of the flip line, and you can just see it's been on this trajectory basically up. The market's been going up and the Gamma flip line continues to follow it. And this is really just a good example of, right, the market going higher, slower, right? Like little more smaller up days and the Gamma flip line following. So vol is being suppressed. If you look at the net history of Gamma, you can see that these are the times we're underneath the flip line. These are the times we're above it. These little blue shaded areas are pops below the Gamma flip line where you may have seen more volatility that specific day. And if you take a look at where we are now at 941, if you look back, this is kind of an elevated level, but we've been a little bit more elevated in recent history. Sometimes when you get over kind of bot conditions in terms of Gamma exposure on this chart, you can see the market pull back and consolidate at these levels as well. All right, let's take a look at the expected moves going into tomorrow's trading session. So this is what the SPY looked like going into today. It was a pretty large implied move, and we kind of just dragged up trying to get closer to it, but the market never actually reached its implied move, so it did finish within it, right? 68% of the time. That's typically normal. I say 68% of the time, sometimes even higher. We'll go for the tag based off of just the options chain being priced under, being priced over, being priced under, or over, being priced under, and so forth. Going into tomorrow's trading session, this is what the SPY looks like. You have your upper daily range up here, your lower daily range down here. So even a slip down to these levels, where would that put you? Put you right back to around where the week to date volume weighted average price is, right? We're not even really, like, that would also put us in line with where we closed last week. So we'd be unchanged on the week again if we came down there. And we have an inclining 5-day moving average, and last week's VWAP were clearly above as well. So the trend in the markets is good, right? We're above a Gamma flip line, right? A lot of all these big mega cap stocks are bullish trends, and they've been setting up. In fact, last video we went over it, so we might as well follow up on what those charts look like. But we're above the rising 5-day moving average in SPY, Qs, IWM, DIA, XBI, semiconductors. So overall, it's hard to be bearish here, right? Like, I wouldn't be pressing buttons to be short, these markets by any means, because you can still have the potential to move higher. And if it does move higher, but yet the risk, the reward doesn't grow, right, to the upside, it starts to diminish. And I think we're in that which I've been saying for the last couple of videos, in this precarious place that we can potentially see something happen very quickly, and that kind of shifts people's thoughts. So it's all about preparation and preparing. For example, right, we've been talking about how this could happen, but yet if we paid attention to the mega caps, some of those names look pretty strong, and that's where I kind of started focusing some of my capital at, right? We went over the bullish percent chart in technology and said, hey, but there's a little bullish divergence forming here, right? Yeah, you can see it's much better at extended levels where it found the April bottom, and it found many different tops at all the bearish divergences. But what does that look like updated? Well, if you update it, bam, we started moving up a little bit higher over here. And some of the names we went over, like Microsoft, how if we broke above this high, right, maybe we see it pop back up to around 518 or a little bit higher. And look at it now, right? So we broke above the high, we popped up a few dollars per share there. You can update your stops if you feel necessary, but that's a pretty good, quick realization that, right, things contract and then we started to break out. It makes sense after a nice consolidation, because these names, they obviously don't go down easy. And look at Apple, right? This is what we showed on Apple, how it was kind of forming this flag. We had good pockets of volume. What does it look like now? Boom, couple of days to the upside, nice couple of, dollars per share. You can update stops or take partial profits and see if this thing has more gas in the tank, because you got to be willing to be able to be on that trade if it continues on. And I took both Microsoft, I took both Apple, I trimmed some of them, and I have a little bit on here with a stop still set. So I'm looking good and healthy there. Amazon, I don't have a position, but this is what it looked like. This is what it looks like today. Followed through to around the upper bound. So if this thing continues to coil up, this also could be, a potentially quick move up to 250. But that's all I got for you on today's Stock Market Brief Show. Hope it gives you some insight as to why I'm being a little bit more cautious, as the market can be setting its, it's a little trap here for some people, and not to get FOMO'd in as we're moving into this September seasonality. But yet there are still many good looking charts out there that I've shared, one on the Discord, but then also two just here on the Stock Market Brief Show. I'll see you on the next video. Bye.